FTX sells locked SOL tokens at auction at approximately $100 rate. The management of the bankrupt cryptocurrency exchange FTX has completed the second tranche of sales of locked native tokens of the Solana blockchain, SOL, through an auction. According to sources from the block, bids ranged from $85 to $110, which is 30 to 9% below the current market value of the asset. FTX announced the auctions for selling SOL on its balance sheet at the end of April, citing high demand. Previously, sales were conducted privately and at a preset price. SOL tokens represent the largest part of the exchange's crypto portfolio. They are locked for 4 years and cannot be sold on the market until a specific date, but are sold at a discount to the market price at the auction. One of the winners of the first auction was the leading digital asset management company, Pantera Capital, which previously launched a $250 million fund to buy SOL from FTX. In total, FTX sold 1.8 million SOL during the auction, which lasted over the last 2 weeks. Mike Cagney, CEO of Figure Markets, reported that the next auction would begin on May 1st. His company will also participate in the bidding. According to 2 sources, Galaxy Trading is also raising funds from investors to participate in the auction. Galaxy Asset Management is handling the sale of the locked SOL on behalf of FTX. Bitcoin DeFi ecosystem thrives despite market correction. The ecosystem of Bitcoin decentralized applications, dApps, is experiencing a resurgence with the advent of native protocols since the creation of ordinals and inscriptions. One such project, the Omnichain Protocol Sol BTC, which generates income, has amassed a total value locked, TVL, of $700 million from its revenue-generating Bitcoin minted on the Arbitrum, Merlin, and BNB chain blockchains. Developers at Sol BTC claim that the protocol recently exceeded a staking total of 10,000 BTC and attracted over 92,000 participants shortly after its launch earlier this month. Bitcoin liquidity revolution is a necessary precursor for the real explosion of BTC-Fi. Soon, Sol BTC will be launched and connected to additional networks, effectively linking users, chains, and BTC protocols, commented Ryan Cho, founder of Sol BTC. Sol BTC utilizes BTC as collateral and a source of staking, along with DeFi revenues on blockchains such as Ethereum, Arbitrum, Merlin, and BNB chain. According to the protocol's estimates, this mechanism can generate annual profits ranging from 5% to 10% on user deposits in BTC. Meanwhile, on April 30th, the company BEVM announced an undisclosed investment by Chinese Bitcoin mining equipment manufacturer Bitmain. Moving forward, BEVM will delve deeper into the study of Bitcoin hash rates and PoW ecosystem applications on BEVM, which could facilitate the migration of PoW hash assets and a significant amount of BTC for BEVM, commented Gavin Go, creator of the BEVM core. Since launching its main net on March 28, BEVM has accumulated over 700,000 user addresses and now hosts more than 30 ecosystem projects. Based on the Taproot consensus, BEVM uses BTC as gas fees to facilitate cross-chain capabilities for Bitcoins and liquidity provision platforms. The platform is currently valued at $200 million. Similarly, on April 29, the Decentralized Bitcoin Exchange, DX, and sidechain Microvision Chain unveiled their roadmap for 2024. Notably, the Bitcoin DEX will integrate with Web3 wallets from 2 major exchanges and create a market for Bitcoin non-fungible tokens, among other initiatives. Web3 startup Matera raises $3.6 million, merging DeFi with social media. The Web3 startup Matera has successfully raised $3.6 million to create a platform addressing the monetization challenges prevalent in the creator economy, according to a press release published by CryptoSlate. The funding round saw participation from notable companies such as Sidor Ventures, Highcast Crypto, Medusa Ventures, The Sandbox, and Saxon Partners. Matera's mission is to integrate DeFi with established social media platforms to transform the landscape of the creator economy. This approach combines the extensive reach of Web 2 platforms with the innovative potential of Web 3, aiming to evolve creator networks into dynamically growing economies. Fundamentally, Matera is not seeking to replace existing platforms. Instead, it aims to leverage DeFi to transition into these platforms, utilizing their direct market and broad user base. This strategy further distinguishes it from other Web3 SocialFi initiatives, allowing creators to enhance their Matera credit rating based on their engagement on established platforms. Users can exchange their credit scores for liquidity and rewards within the Matera ecosystem. Sam Huber, CEO of Matera, pointed out the limited adoption of Web3 SocialFi, attributing it to an underestimation of the network effects of Web2 platforms. He added, even if the economy improves, the switching costs are too high for creators to start building an audience from scratch on a new platform. Matera acts as a bridge, allowing users to benefit from the scale of Web2 and the economy of Web3, solving this dilemma. Matera anticipates that its solution will catalyze significant growth in the creator economy, forecasting that by 2030 it will surpass $1 trillion and attract a network of 100 million creators and their subscribers. Matera plans to develop a robust blockchain infrastructure, including a DeFi platform, protocol layer, and Layer 2 network. Currently, Matera supports creators on the social media platform X, enabling them to raise funds and monetize their loyal fan base. However, Matera intends to extend its integration to other social media platforms in the near future. XRP poised for a 70% surge. Market analyst Linda has indicated that XRP is on the verge of an impressive 70% upward trend following a recent false breakout of a key support level. XRP recently experienced one of its most bearish periods in mid-April, plummeting nearly 24% from the 11th to the 13th. Amidst the broad downturn, XRP's price momentarily dropped to $0.4188, marking its lowest price this year, last seen during the crash in August of the previous year. Following the drop to this price point, bulls were quick to initiate a recovery, pushing it back above the 50 cents price zone the following day, highlighted by a 5% intraday gain. Linda recently confirmed that XRP had a false breakout below the key support level when it dropped to $0.4188 on April 13th. Notably, bulls have been staunchly defending the psychological 50 cents support since last October, effectively hedging any declines to lower levels throughout the fourth quarter of 2023 and this year. However, the fall to $0.4188 marked a significant breach below this level, triggering market panic. Despite this, Linda remains optimistic about XRP's bullish trajectory, asserting in her recent analysis that the price will continue to consolidate above the 50 cent support. She predicts this consolidation will eventually lead to a continuation of the growth trend. The analyst expects XRP to register several days of downward momentum to retest the 50 cent support before a potential bullish push. She has also identified a symmetrical triangle in which XRP has been trading since April 2021 on the weekly timeframe, noting that a breakout from the trendline resistance is imminent. This breakout could bolster the upward momentum when it materializes. Should this occur, Linda forecasts a maximum increase of 70%, setting a target at 85 cents, a level last seen in July 2023. However, to achieve this target, XRP will need to overcome two key resistance levels at $0.6431 and $0.7325. A resurgence in whale accumulation could aid bulls facing these hurdles. Sentiment data reveals that addresses holding between 100,000 to 10 million XRP continued to increase their holdings last week. CryptoBasic also highlighted several instances of whale accumulation throughout April, with whales accumulating 600 million XRP in the 2 weeks leading up to April 23. Linda attributed this trend to a buy the dip campaign initiated by these investors, further intensifying buyer pressure. Currently trading at $0.4983, XRP must maintain above certain key support levels to preserve its consolidation range. The first support level XRP continues to defend is at 50 cents. A break below this level would activate the support at $0.4226.